to be a very volatile day, very likely to be a volatile week. I do definitely think that it's a challenging time. I remember this exact conversation back in 2020. Very challenging time for new traders to go around and gamble without knowing what they're doing. I would encourage you to stick to a demo account. If you are not a profitable trader, this is a time to exercise caution, and don't go around YOLOing your account, because it could wake up with a headache tomorrow, if you will. Anyways, we got Chris Pulver taking over the show here in a second. I just mentioned that you guys can get access to the Edge Finder and the VIP room. It is currently all on super sale for the Black Friday discounts. You can get 45% off while we're live streaming if you send us a direct message. Send us a DM right now here on our website. This will connect you to a real person on our support team. If you do so, we'll get you 45% off on whatever you want. You get access to the Pulver alerts, which are up next. You can see Chris Pulver. You can see all of his trades. You can get access to the Gold VIP membership, which gets you access to all the trades that I'm taking. Every signal that I share goes directly to your Discord, to your mobile phone, to your desktop, etc. You get access to the Edge Finder and all of its powerful data, all in one single browser-based terminal for a one-time price. All of it is 45% off. It's the biggest sale that we do all year, so don't miss it. We'll take a quick break here, and then Chris Pulver taking over the show just after this. Check it out.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A Pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey everybody, how we doing? Happy Tuesday. Happy election day. Just posting a message in the Pulver alert section. Just posted that in my index trades, adding a position on RSP and adding a position on QQQE. Pictures posted. I'm looking at these from a dollar cost averaging standpoint, and this is what it looks like. So take a look at the SPY at 574 versus RSP at 177. So it's a fraction of the price. It's not as liquid, not in a bad way, but I'm dollar cost averaging as opposed to trading options around it. I'm putting $1,000 position in an RSP with a bit of this 3% pullback we saw since the recent highs. I'm also putting in a level around a 6 or 7% pullback around the 200 moving average. So here's my trade on RSP. So I bought it at 177.20. And I mean, if you were to settle for the trade right now at 177.47, that's still okay. That's acceptable. The other levels around 170, which I'm looking at this 200 EMA around 168. So I'm okay getting filled there. The idea here is if we have additional rotation going into not just the Mag 7, not just the top 10, not just the highest concentration of stocks, but actually broadening it out into other sectors, then the RSP and the QQQE should hopefully perform pretty well. They're also a fraction of the price. So, QQQ at 490, I can buy a lot more bang for my buck there at $90 and see if it's going to outperform. So, or even match performance, but do it at a fraction of the cost. So I'm buying some shares of QQQE and I'm buying some shares of RSP. They're two little dollar cost average allocations. If we hit some all-time highs, great. If we pull back, finding some support, there's an extra level that I would add to it. If we pull back to this August 5th bottom, then I'll probably add another trade around $82 on QQQE, and that would be from high to low, maybe a double-digit pullback. So from this high to this low, that'd be about a 12% pullback. I'm happy scooping up some more shares there and just continuing kind of this dollar cost averaging. And then same thing on RSP. We're at some decent levels at the 50 period moving average. I'm buying that now. I'm going deeper between the 144 and the 200 moving average. If we came all the way back down to this August 5th bottom, that'd be around 162. I'd say 162 to 160. Happy to scoop up some more. And that would be, for me, 1, 1, and 1. So about $3,000 position. I'd probably have like a 8 to 10% discount on the all-time highs, and it's not super expensive. Also, if I own enough shares and I can trade at least an option contract, then I can lower my cost basis as well. So I'll keep an eye on that. So intraday, price has, come right out of the gate swinging with the daily trading range around 48 points from close yesterday to high today. I'm hoping that as we're in today's session, price either comes back to this little black line and gets me back to center. That's a trade I have in SPX this morning. If it goes higher, I have a stop loss in just in case. But if price just goes sideways, that hopefully time decay is going to work in my favor to grab some profit. We'll see what that does. I'll keep an eye on that one for the morning. I put in some trades yesterday. Let me see here. I'll look through my trade alerts. So in FOREX, I put in some pending orders on the New Zealand dollar. Today's currency strength chart is actually showing Aussie is strong. New Zealand was second strong. Pound dollar, I'm currently long. We've got the Swiss and the dollar. We'll keep an eye on those. I would say this: expect a lot of volatility for today, tomorrow, Thursday. I keep saying this, but I posted a video on TradingView yesterday that went out to my YouTube channel and Twitter. To me, I'm looking for pullback levels. I've got lots of cash at the ready if we have some decent wicks and some nasty pullbacks, but I don't know. This market might just be sitting here with this slight, 2, 3, 4% pullback and just waiting for the election to be over with until it decides to try to go higher. I just think we have to be mindful of the potential drama that's going to happen this week. Case in point today, if you're watching, live election results, look, there's going to be some reds and blues that are going to be printing here in real time. If we don't have a declared winner tonight from the Electoral College standpoint, and it's going to take, states potentially days upon days upon days to get in their votes and their counts, and people are still waiting in line, all throughout the night. Who knows? Nobody knows what voter turnout's going to be. But it's going to be interesting to see how the betting markets that set the lines that, we saw like Polymarket and Kalshi, or I think Kalshi is one, Kalshi, I think is the other one. But anyway, those were calling for like almost a landslide victory for Trump, like 58 to 63% is what I saw. But then you look at 538 and 270 to win, things like that. That's an interactive map, but 538 had the polls pretty even at like 47, 48%. So nobody knows. I just think if the market doesn't get a clear winner today, doesn't get a decision, then there's more indecision volatility ahead. We also have the Fed coming out Thursday, which is expecting to be another rate cut. And we just want to keep our eye on things, So I'll be watching this unfold throughout the day, throughout the night. We'll see what happens. Currency strength chart, interesting risk on rally. We saw China doing pretty well overnight. Here we go. So that's part of the reason my portfolio is up a pretty decent amount today. I'm up about 18 grand. A lot of that is just based on China being better positioned. So HSI up 2.14 today. BABA gapped higher. It's a red candle on the day, but did gap a little bit. So hanging into that 1.38% move. Baidu, same thing, gapped a little bit higher. It's a red candle. FXI hanging in there at 32.50. I'd like to look and see. I got 57 cents credit and 27 cents credit. I think the debits might be still a little bit high, but I want to check those positions and maybe just close them out. I am, $1.51 above this strike price, and I am $2 above this strike price. So if I can close these out for a partial profit, I may, because I'm in like 10 contracts in each one of these. K-Web, again, gap higher, but fading. JD, slight gap higher, right around $40. I'm trying to get it called away at 42. I put a trade in on Intel last week, monitoring this one towards the end of the month. I'm watching Pfizer. I've got Pfizer out to January. I'm trying to get this one called away like week to week. I've got I think it's 11/8 expiration on Pfizer. Yep, I hear you. Blue Boy says, hope it's not a confusing mess tonight. I do too. I hope it's just, if a declared winner happens and it's a smooth transition of power and it's not a contentious, no, I don't trust the results, or it comes from either way. I mean, just my opinion would be Trump would maybe more vocal about, the election is rigged, and Harris would be like the Democratic monster in the background's like, we're just going to take days and days and days to trade or to collect all the polls and get all the results. And I don't know. There could be all sorts of weird stuff happening. So it sucks to think that voting is now skewed or voting is now potentially rigged. It's like, is it misinformation? Maybe. I have no idea. And I'm not here to start some conspiracy thing and, well, I know this is happening. It's like, I don't, and I don't care. It's like, if you have a voice and you can vote, go vote. That's how you can express it. Now the results, I'll live with them just like everybody else. And we'll figure it out. But we'll see. So hopefully it's just, like I said, if it's a smooth transition of power and a declared winner, easy peasy. So this is what I'll be just monitoring. I don't know if the currency market is going to be nearly as volatile. We might see some action on the dollar tonight, possibly. But as we've seen, I mean, take a look at the dollar index. We've been watching this obviously for the last couple of months. This is not giving me the confidence to say the dollar is going to get weaker. I still, even with the Aussie turning up today, I still like the levels that I'm positioning for. I'm not going to trade this Aussie dollar now, right? I mean, if this Aussie dollar is up here, but we have all this major support, I mean, that could easily turn south again. I'd much rather scoop up dollar or Aussie dollar down here to buy extremely low. Okay. And New Zealand dollar, same thing. Like, I like these currency pairs a lot. I like the structure on these. This is the one that I posted yesterday in my FOREX alerts. I mean, I want to be in the New Zealand dollar going back to 2022. There's major support here with a nice intermediate range. I'm just trying to scoop up some levels. So if this goes up and none of these trades get filled, then I cancel, then I cancel, then I cancel, and I don't have a trade. Okay, but we'll see what happens. Pound dollar, I'm currently long and up, I think, like maybe 50 to 100 pips. Currently up around 108 pips on that pound dollar. That's fine. Dollar CAD still looking for a breakout trade. We pulled back. These are all stacked up orders. So dollar has to break above 1.40 on dollar CAD. I'm looking at a breakout trade. Also, this is another one to watch. If dollar CAD ends up going up to my measured move, that is because oil is probably breaking the floor at $66 or $67. Okay. So we'll see how it all plays out. But if there's some currency drama, Japanese yen, dollar, Aussie, whatever, I'm interested. What I might end up doing, I don't know. I'm going to be hanging out tonight, trying to think. If anything interesting happens, I might throw up a live YouTube session. Nick and the team, I don't know if you guys are doing anything for election night. Usually I don't. Usually it's just, I don't like watching the stuff, but I'll just have like basically a website up and running, refreshing it every maybe 30 to 60 minutes. See when like the big swing state votes are coming in. So Florida's declared a winner. If there's anything in Pennsylvania, Michigan, some of those big swing state votes will be important to watch. But early on, I mean, California is obviously a big one, but mostly that's a blue state. That's just a lot of electoral votes, right? But it's always, it's Pennsylvania, it's Michigan. It used to be Ohio. I don't know if Ohio's as big of a swing state anymore. Wisconsin may be. But I've got the big ones in the Midwest. You got Michigan, Wisconsin are big ones. Pennsylvania's become a major one. Iowa, used to show that whoever wins in Iowa was like declared winner, but that could be debunked. And then you got swing states in the Carolinas, North Carolina, South Carolina, Georgia, Florida, all swing states as well. So a lot going on there. Okay. Good question. Will S&P go up? I mean, it's like I said, I think a lot of it depends on how clean the election is. Not only do we have the election this week, but we also have the Fed on Thursday. Okay. We are sitting, just wrap your head around this for a second. We are sitting near all-time highs on all the major indexes except for the Russell. Okay. The NASDAQ is only from the QQQ side, our all-time highs right back up here towards July. I mean, the NASDAQ is only about, let me go here. The NASDAQ is only about 2.69% from all-time highs. The S&P is within a couple percent from all-time highs with what we just had a 3% pullback. The Dow is sitting up to all-time highs with about a 3% pullback. I mean, if this could be an extremely healthy bull market, if this is just a 3% pre-election pullback, in post-election, this market's like, off we go, bye, 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 and here we go. I mean, that's an amazingly healthy, very greedy bull market, if that's all it is, right? But is that it? I don't know. So what I'm bracing for, and I posted a video of this, you can see it on my YouTube channel. Let me see. I mean, if you're looking for my thumbnail, I think I did this one yesterday. So on my YouTube channel, I posted this video late last night. I couldn't sleep. It wasn't like election stuff. I had like this crazy spicy Thai food that kept me up all night. It was so weird. It's like, I don't know if anybody's had like crazy hot spicy things, but it's like a natural adrenaline rush, and it kept me up all night. Like I didn't go to bed until like 3 a.m. So that was a little nuts. So I'm wired today with 0 caffeine. But anyway, I posted a video just looking at, I like all these pullback levels. I have a lot of cash at the ready. I will deploy that cash if we have decent pullbacks and discounts. It's as simple as that. Now, do I know that I'm going to get those pullbacks? No. In fact, this might be it, and this market goes higher, and that's it. And there might be limited gains to the upside, but perhaps it's enough to say, okay, we're right back up here, because now the catalyst is we have a presidential winner. Here's what we're looking forward to. And then the market likes to do this. The market likes to price things in, doesn't it? So if Trump is victor or Harris is victor, the market might look at, okay, what do they stand for? What do their policies mean for a Democratic side or Republican side? What does the market think of that? You know, I think right now a change in administration might be a little bit more exciting for the market. So if Trump becomes president, the other thing with Trump could be, you know, I don't think tariffs are going to be a problem until 2025. If we have a trade war situation, that could be an issue, but probably not that the market's going to vote or, you know, price it in right now. But it's going to be immediately looking for tax breaks, and that's going to be something that's positively priced in. You have the, you know, heavy amounts of deregulation. You'll probably see a weaker dollar. All these things with Trump are likely going to be the case. Like I said before, the concern with either candidate would be a sweep. So if the Republicans win everything, House, Senate, and presidency, that means policy change. If the Democrats win everything, that means policy change. So the markets may not love that. You know, if it's sweeping Democrat, taxes are going to be a problem. There's probably going to be higher taxes somewhere. It's not a tax problem in the U.S. It's a freaking government spending problem. It's as simple as that. But we have a government that is recklessly spending with debt ceilings that don't exist anymore. And, you know, this is what reality is knocking on the door at some point. What does that look like? Probably horrible global financial reset. But that's a big doom and gloom thing that hangs over the head of every investor out there that nobody knows if it's going to happen or how it's going to happen. So you can't really think like that, right? We have to trade what's in front of us. Don't be overexposed. Don't be over leveraged. Play protection, which that's what I'm doing. So I'm hedged, you know, pretty aggressively on the downside to all the major indexes. I'm hedged with the overall portfolio to at least lessen the blow. And you know, if I get some scoops and dips, like this is what I want to look at. If we get some decent wicks to the downside, I'm probably going to look at trying to aggressively, you know, scoop up some risk-defined trades and then try to get this going back up. And even if it's a range trade, you know, I realistically would be very happy to see a great healthy run that we've seen and then having some type of range that we can trade, because having support, even for the next 6 to 12 months, very tradable for me, you know, as opposed to thinking I'm just going to go to all-time highs. Like maybe it does, maybe it doesn't. But my concern about all-time highs, I mean, the further we get away from this 200 EMA, the more that reversion and that crash is going to get bigger and bigger and bigger. So a healthier market to me is either we stay sideways here and we let these moving averages catch up and justify another round of gains where it looks like a healthy accumulation, or we see some pullbacks into some deeper levels. We offer up some discounts, and then we can scoop it up at a discount, trade it back up to a targeted all-time high, and hopefully make some good gains to close out the year or go into Q1 of next year. Okay. And of course, everyone watching gold, everyone's watching Bitcoin. What's that going to do? Your guess is as good as mine. But what have those markets been doing so far? They've been going up, right? So, you know, dollar, I'll watch the dollar closely. Oil, I'm not trying to play the bottom here, but maybe there's some support. You know, I've said this before. If oil goes up, that's inflationary. Oil goes down, that's deflationary. Okay. The one thing we don't have right now, we just saw CPI, PPI, and PCE all be higher this last month, right? Through October, all those inflationary data points were higher. I keep going back to that Truflation reference. It's higher than the low we saw back in September. So I think the CPI data that comes in, you know, for November's print is probably going to be higher. They're forecasting a 2.6 CPI. We just printed 2.4. So that's trending the wrong direction. Well, 2.6, is it, upsetting the market? Maybe not. But if 2.6 becomes 3%, right? If 3% becomes 3.5%, well, yeah, we've got crazy amounts of inflation returning. And we know that's what it feels like. We know that's what's happening, but we'll see what the data shows. Okay. So, point is, oil, I think that for inflation to remain trending sideways or lower, oil is going to have to break this floor at 67. I don't know if that's going to happen or not, but even with the Middle East conflict, we're not seeing oil prices shoot up higher. So it's clearly, really supported at like 67 until it's not. Until it's breaking. If it breaks 67, I think we drop to $60 or $55 in a heartbeat. So just be mindful of that if you're trading oil, that floor can break. So make sure that risk stays defined. Same thing is true on CL. NG continues to bounce all over the place. I'm hoping that NG pulls back, and I want to trade this over the summer next year. Gold, okay. I'm just waiting for a decent pullback on gold. We don't really have one yet. Let me check my SPX trade really quickly. Got to monitor one thing. Man, come on, dude. Like, price hasn't gone anywhere. Ugh. All right, I'm just watching this trade. So basically, here's what happens. If I see price go directional, I'll probably get stopped out in the trade. If it stays here for the morning or goes a little bit lower, I'm looking for this thing to recenter around that black line. So just got to keep an eye on it. Hopefully, it stays pretty quiet. We'll see. What else? Get out of here. Go to here. So gold. Gold's been in one of the healthiest bull markets I've seen for any stock. I mean, we've had rips and sideways allowing it to accumulate, rips and sideways allowing it to accumulate, and then the breakouts have gotten more and more aggressive. So, this nice accumulation zone breaks out, stair steps, breaks out, stair steps. So if it breaks out, is it stair stepping again just to go higher? Maybe that's it. But I'm probably not going to buy gold at these tiny little shallow 21 pullbacks. I'd like to see a 50 or 100. Now that might be wishful thinking. I might not get the entry that I want. Gold might go higher, but that's okay because I have GC and I'm long. I have GLD and I'm long, and I can benefit from those gains without having to add an arm and a leg to it. But if we get pullbacks, I'm going to add more and add some defined risk trades at those levels, probably a 50 period moving average, probably a 100 period moving average. If we come back into the 200 period, I would like this also. And again, I don't know if we're going to get some type of violent pullback like that. If we do, great. If we don't, then I'll continue to play the melt up like we've been playing all year. Silver, same thing. I'm long silver. And if we pull back deeper, I'm probably putting some more defined risk trades in. I'm looking for a measured move here at 35.88 and higher into the 40s. So target 1 and target 2, I've got that measured on my chart, I believe. Right there. Yep. So target 1, target 2 that I'm going to remain long on silver. And that's not a play on Long John Silver, if anybody likes hush puppies. Silver futures, SLV, same thing. Watching these levels. I'm exposed on both. Bitcoin, nice little daily candle on Bitcoin. The question I'm sure everybody wants to know is, are we going to break all-time highs and head up to 100,000? Okay. I see Daniel saying 120. I mean, look, I've got a trader's measurement here all the way out to 108. That's a symmetrical move based on a swing. I think that's something the market is able to get. All I'm looking to do is see, can we break all-time highs? Is there momentum there to get another bull flag or a pullback? So if we go, break out above 74,000, we have a break and a retest, or a break and a flag. Can we go higher from there? Okay, that's my first measure move. Now, that doesn't mean that I'm done. Right? If we get to 107, 108, I mean, I will assess what my overall accumulation has been. I mean, I'm long BITO, I'm long IBIT, I'm long FBTC, I'm long MicroStrategy. I've got some credit spreads and ratio spreads on Coinbase. So I have some correlated, instruments there, but mainly just trading straight Bitcoin. If you're trading straight Bitcoin, you're either trading straight Bitcoin or you're trading, maybe the closest thing would be your IBIT and FBTC. Those are the best looking correlated ETFs that I can see. Okay. Yeah, MicroStrategy, it's not crazy leverage. MicroStrategy, the stock itself is not leverage, but you've got the like 1.5 or 1.75 or 2x leverage MicroStrategy, which I think is nuts. It's volatile enough. And MicroStrategy has kind of been almost leading Bitcoin in a way, but it also is, if Bitcoin's up, 30%, MicroStrategy might be up 50%. But if Bitcoin is down 10 to 20%, MicroStrategy might be down 40 to 50%. So it's extremely volatile on both sides, but it has been, kind of leading the way where MicroStrategy has pushed up to these all-time highs. I was actually looking at this yesterday during my 3 p.m. YouTube session. I was contemplating a buy at market at like 223 and then trying to put a 225 call, lower my cost basis down to like 205 or $200 and just trying to play in the game, playing the game of crazy high premiums, collecting some profit, lowering the cost basis. But I just thought, man, I'd be dumping like $150,000 into MicroStrategy, which fundamentally is overvalued. Like fundamentally, discounted cash flow model shows MicroStrategy at like $140 fair value. So I don't really like buying it at 234. Now, I can trade all sorts of options. So I've got bull call spreads and other activities there. I have ratio spreads and 1-1-1s and all sorts of fancy option strategies. So, I mean, there's ways I'm participating, trying to make some money on it without actually owning the shares. One spot that I wouldn't mind getting some ownership would be this. If we pull back to $200, I mean, that's a great spot to look to buy, right? But I wouldn't just throw I wouldn't throw 100 shares at it. I would probably do, maybe a $1,000 to $2,000 position. And if it pulls back more, like again, you could treat this one with simple dollar cost averaging. Area 1, if we pull back to past resistance or pull back to some nice dynamic support, this would be another position. So let's just say position A, position B, position C. And then I mean, again, longer term, I think for MicroStrategy to go to all-time highs yet again, you're going to have to see Bitcoin going higher as well. So I mean, it is pure speculation, but I think MicroStrategy is a good proxy to have like basically leverage Bitcoin trading without actually going to the MST. What is everybody should tell me what this is, but there is a leverage ETF that just trades MicroStrategy at like 1.5 or 1.75 or 2x leverage. And I just think that's nuts. So I'm not interested. I hate leverage instruments like that because their repricing can be so violent. Anyway, so that's that. Copper is going to have to take a play out of China. If China is up, then I think copper has a good opportunity to go higher. I'm not doing anything to copper. The straight up like risk reward was about 1-to-1. I didn't really get an edge there, so I didn't take a trade. But to me, copper, I think the big deal on copper is we have to see some global optimism. And I think with the U.S. looking good and China trying to offer the stimulus and lift animal spirits, if U.S. and China are both looking good, I think copper is a very solid play. If U.S. is up but struggling to make significant higher highs and China is still indecisive, if China is like meh and US is meh, then I don't think copper's a good play. So, I mean, this was a good play in copper. When we had this ABC correction, that was a great trade in copper. But from this point forward, I'll wait and see. If it's more of a range trade, maybe a copper range trade, then see if I can scoop up some support. So I'm not forcing any trades right now. The reward to risk wasn't that great. Yeah, MSTX. Yep, correct. PL, yeah, what is that? Is that platinum? Yep. Platinum futures. I've got a box drawn in this one. There's just a lot of chop. Now, let me go to the weekly time frame here. So my broker doesn't have platinum futures, or else I would be doing probably some out of the money credit spreads, because I think this level around 860 is looking pretty attractive. 860 to 800 looks really good for a buy zone. We also have a potential kind of a wedge in here that's going to coil and have to make a decision. It doesn't have to. I mean, this could go sideways and go long, and it doesn't really do anything. But eventually, if all this does is carve out a bottom, then I do think that, higher inflation, weaker dollar, better commodity prices, scarcity. I mean, who knows? This could be a lot of things. But if I'm scooping up some defined risk trades, I mean, bull put spread right here, or, even a naked put. I wouldn't want to take assignment, obviously. But a naked put and just go after a partial profit. I think in this kind of 850 to 800 zone, I like that level to be, holding some positions, collecting some premium on platinum. So if I could trade it, I would. But right now I'm seeing it's up 1.62% today. It still hasn't really gone anywhere in the bigger picture. So I don't see much happening there. Other than a range. Like if you can scoop up some lows, I'd like the price. I'd rather be long than short on platinum. Palladium, also some volatility, but my broker doesn't let me trade this one, so I'm just waiting to see. But I like this one back at 905. This is corn futures, same thing. Do we come back down to these multi-year lows? Soybean futures, same thing. We come down to these multi-year lows. CC is cocoa. Just this was more of like a spectacle because it had such a ridiculous run earlier in the year. Now it's extremely choppy. And then also I should put ZB in here for bonds. Let me put that in here. So ZB should be our treasury bonds. Speaking of bonds, I want to go to seeing that the 10-year is, oh my gosh, you freaking a-hole. 10-year bonds up to 4.36. We're up 1.7%. Look at the daily chart. It was down like 2% yesterday, and now it's right back up. So, and again, this could be election stuff. We got the Fed on Thursday. You know, the Fed is likely going to cut. We know that probability is extremely high. We'll see what the language looks like. So, CME watch tool. 97.3% chance that Thursday we get a rate cut. And then if the Fed is vocal about another one, that would be cut for Thursday, and then the 18th, cut for the 18th. January, potentially a pause going into the new year. So we'll see if there's language around the press conference on Thursday. Hopefully, like I said, there's not a bunch of election drama to go with that. We'll see. But, you know, it's not the Fed's job to comment on who's president. I don't think it's going to matter. I don't know. And that's another thing, like the Fed could be, I don't know. I mean, Jerome Powell could be kept as chairman, fired as chairman. There could be some, I mean, I don't think you've got the authority to like denounce the Fed. Oh, I just got stopped out of my SPX. What, dude? That thing barely moved. All right, that sucks. Let me update that. So that trade is trade one, $2 credit. Okay, 1 second. Oh, well. Okay, so this is okay. If the U.S. economy is going to get in some trouble, if U.S. economy is going to get in trouble, this 10-year is going to continue to rally. What goes with that? Auto loans, student loans, mortgages, anything that's 5 to 30-year financing will pretty much be using the 10-year as its proxy. So this doesn't mean like, oh, the 10-year rate's going to be 4.3 or the mortgage rate's 4.36%. No, not even close. Because right now the mortgage rates are sitting back around 6.72 to 7%. So they were, when we had a low right here in the 10-year, mortgages are about 6.09, and they've ripped up by about 70 basis points. And so we're looking at like 6.7 to 7% right now in mortgages. This could be something that absolutely crushes the economy. If this goes higher, whether it's 5% or higher than 5%, I would expect a much more crippling event if this 10-year yield does not stop surging. The other thing that's a bit scary would be taking a look at the disinversion. Look at how aggressive this 10 and 3 month is being. This is a 10-year versus a 3 month. This thing has been on a mission to get back towards that zero line. We've seen that the 10 and the 2-year got disinverted, but I'm way more concerned about this 10-year and 3 month being disinverted. You go back historically, this has always been an undefeated indicator when it comes to recession. Go back to 82. Anytime we've gone from inversion to disinversion, there's always been some hiccup, recession, some slow growth period. And yeah, so as we got into one of the deepest inverted yield curves, and now we're coming out of that. I mean, nobody can model this. Nobody knows what this does. Is this going here for a big question mark? Are we going to actually see this go lower somehow? I don't know, but I'm legitimately worried about, once the 10 and the 3 month get outside and get disinverted, that we might have some trouble ahead. So just saying, it's been a good run, but we'll see just keep an eye on it. Right now we're about 34 basis points from the zero line, but if this keeps just ripping to that zero line, which it has been since September 18th, this looks like a, inverted yield curve on a mission to disinvert. So we'll see what it does. Okay, really quickly, I'm going to take another stab at something here. Trade SPX today. If I go so annoying. All right, what else do we have here? China's looking fine. Take a look at some currencies, individual stocks. We got a bunch of earnings today. I priced out a couple. I in my chat. Let me see here. In my chat, in my trade alert section, let me talk about the trades that I just added in really quickly. So New Zealand dollar, pound dollar, my recent currency pairs. Index trades, I did the RSP QQQE today. DJT, that was another trade I did in the stock section. BRKB, I added that in yesterday. MSTR, I'm in that as well. Those are dollar cost averaging levels on MicroStrategy to buy in a couple levels, just small, looking at $1,000 chunks. Tesla, I'm still on that one. Actually, I want to take a look at Tesla. Tesla trading at 250, what? 251? 251. So I have a 250 by 255 bull call spread. I've got the 270 by 265 bear or bull put spread. So this is a credit spread. Credit spread here, debit spread here. If Tesla goes higher, that one pays. That one pays. If Tesla goes lower, I use this one to own the shares. I want to own the shares, low 200s, work the cost basis down aggressively, and try to flip this thing for at least $10 if I can. I'm going to try to flip it for at least $10 a share. That'd be $1,000. Okay. If I go to what else? I had one in mind. Oh, NVIDIA. Yeah, somebody said NVIDIA. So NVIDIA at 139. This is another stock that I'd love to see some pullbacks. We're sitting here at equal highs, or just that little false breakout. I'm not saying NVIDIA can't go higher. Okay. The only thing that I saw in NVIDIA was how far away it was from the 200 EMA and coming back to the same high again. If it struggles to make higher highs, okay, or just slowly gains higher, but we see all these moving averages catching up, I just like to use them for some dynamic support. So there's a couple levels I'd like to see. We get a pullback towards the 50 or 100 EMA. Even if we test the backside of this trend line, I wouldn't mind scooping up some NVIDIA there. Probably do option trading. I would probably do bull call spreads, bull put spreads. I've got ratio spreads way down here. When that July and August event happened, I was doing some pretty heavy premium selling. So those are likely going to hit for full expiration. If I ever took ownership, it'd be like sub $80. I'd own it at like $80 to $75. So I probably have to. Those are all looking good for profit. NVIDIA, without owning a single share this year, has paid okay. Oops, I go NVIDIA. NVIDIA positions. So I'm up around $4,900 without owning a single share. So obviously, if I own shares, it'd be like, oh my gosh, you'd kill it this year, but I didn't. And also, by the most of the time I was trading NVIDIA, it was a $500 or $600 stock. I wasn't that interested. It got up to $1,200. I'm not that interested in buying the shares. Dollar cost averaging is one thing, but since they did the 10-for-1 split, I became a lot more active on it because now, I've got the capital to buy it. So anyway, so I want to see some pullbacks. That's it. It's pretty simple. I'd like to see a test of the 50 or the 100 before I get some defined risk trades in. If we somehow pull back deeper, great. I still think it's well supported. I think this is now a major part of the S&P, major part of the NASDAQ. It's pretty much carried the weight of the S&P this year. I want to say I could be off by a little bit, but I think almost like 1/3 of the gains this year in the S&P were produced by NVIDIA. Just because of the market cap weight, how large the company has become, it's basically between 1, 2, and 3 largest in the world market cap wise. And because it was up like 100+%, it's responsible for a majority of the gains we saw in the S&P because of market cap weighting. So it's obviously meaning a lot. It's one of the more important stocks to be watching for the rest of the year. We also have earnings coming on NVIDIA at the end of the month. So this is going to be an interesting time. We'll be through the election. We'll be through the Fed. We'll have earnings season winding down at that time, but we'll be right on the cusp of holiday trading. So if, I would say if NVIDIA is offering any discounts going into earnings, I would be glad to do some trades around earnings. So I'd like to get some pullbacks. That's all I'm saying. A lot of the stocks, even gold, a lot of the stuff, it's like, give me a pullback, give me a wick, give me something. And I even tried to price out. I think it's safe to say we're going to get and expect some volatility this week, right? I even priced in a reverse iron condor, which would be I buy a call and buy a put, and then I sell a call and I sell a put, and price just has to go outside of this volatility area. Now to do that, I'm essentially going to have to pay $8 for every $10 of max profit. So it means I get a profit of $2 to risk $8 to go play volatility. I'm not going to do that. I just think those prices are outrageous. So I'm just going to wait. If we go higher, I look at it this way. If we go higher, this is the easiest thing. It's a melt up. Okay. If it's a melt up, enjoy it. Most of you are probably already long in your portfolio anyway. So if it melts up higher, it should get a lot easier to watch some more gains. If we have a pullback, that's what I'm actually hoping for, because then I'll start allocating more dollars. This would be fresh capital on the table at discounts. And I'm not saying it can't get ugly. That's what nobody knows. This event from July to August was pretty darn scary because it happened in literally 3 days. You had this little turn, and then in 3 days, the market sold off almost 9%. That's a lot, So it almost felt like a rush to the exits, as opposed to, melt up is pretty easy because it's slow and steady. To the downside, we could have some, election volatility and some crazy drama. But if we don't have it, then enjoy the melt up, and the rest of the year probably looks pretty easy. Because at this point, Fed's going to cut, market's set in motion, market's going to make higher highs. Seasonality is something that a lot of traders and investors rely on. And that being said, it's like, okay, so what do? You just enjoy the run, enjoy the melt up. Okay. So I will say this. I mentioned this last week in a live session. I said it yesterday, I think, the day after the election. So I would say this. If we have a winner declared tonight and the market closes green tomorrow, I think that's a good indicator that we're going to be bullish for the next couple weeks. If the close tomorrow is red and we have a declared winner from tonight, I think that's an indicator that the market might pull back over the next couple weeks. Now, whether that affects the overall end of year target, I don't know. But there's been an interesting trading phenomenon through the election year since 1996 that you get about a 2-week run of direction on the Wednesday close. So there's going to be a lot of jockeying after today and tomorrow. I'll see what it looks like. So I'm just willing to wait. Cash at the ready on pullbacks. Melt up is easy. Just let your positions do their thing. Higher highs are good. Okay. Who do I don't really care. Honestly, it's like, South Park, I think, does it best. If you ever watch the South Park election episode, that's pretty much my thoughts on this whole thing. So I think Trump is way more of a disruptor. I'm sure that typical politics don't love it. He's crazy enough and rogue enough and unpredictable enough. It's scary for everybody. But it's also not the machine. So there's pros and cons to each side. I just wish it wasn't Donald Trump, who, I never thought as a celebrity reality TV show, kind of false billionaire narcissist would be a president. But here he is. The guy's basically the human version of PFAS and Teflon. I mean, I don't know how nothing sticks to the guy, but he's still running for president. He's one choice of two. So I feel like this is probably the lowest point in my voting history of like, I hate that we have to vote for these two. I wish I could just put in write in no confidence and see if that would actually be a vote that took national interest. That'd make me happier. Because I feel like if you could vote no confidence for DC in general, I think that would speak more volumes to see what the countries may be feeling. Okay. And that's what's funny is look at how sensitive that topic gets. Does it matter? It doesn't matter. Okay. I think what's crazy is how this has divided our country just on that conversation. You should not be opposed to having this conversation with friends, with family. Like, politics shouldn't divide your household. Politics shouldn't divide your family. You know, nobody has cared about government ever. It's just something that exists. But now it's so big and it's everywhere and it's invasive and it's everything we do is it's government, government, government. So I think that's the only like the good thing that Trump has is he's such a disruptor that it's not the status quo. So I just don't know how anybody can look at that guy's history and say like he should be president. But is it better than Kamala Harris? I don't know. Maybe. You know, could we have inflation? Are we going to have fiscal spending? Probably on both, right? What I'm seeing right now is Democrats will probably spend $4 trillion in the next 4 years. Republicans will spend $6 to $7 trillion in the next 4 years. Either way, fiscal spending is out of control. We've collected 63% more taxes and we spent 93% more of the government. It doesn't end well, however it looks. So a president is not changing anything, right? We have checks and balances. So the one thing that would happen for change would be some type of sweeping Republican win or sweeping Democrat win. That's where policy changes. But if it's Trump president with gridlock, nothing really changes. You know, the extreme policies that are being proposed will never take shape. And same thing on the Democratic side. You know, extreme policies that will take shape will never materialize. So markets like gridlock more than anything else. I mean, Nick, I think it posted that on Instagram. I mean, the markets actually like indecision. Not indecision, they like gridlock. So just no major disruption in policy, you know. So we'll see. So like I said, all I'm saying is I'm not here to be political. I just think it's you have to look at how sensitive the topic has gotten. That's probably the most disruptive thing is how it is completely making people so sensitive, so angry about just the topic. It's crazy. Like that to me is crazy. So it feels weird. And you know, I don't mind having those conversations. I'm interested to hear why people are voting one way or the other. But it doesn't change the opinion of the person, you know. So that's just a little upsetting is that it's now like very much like toe the line, it's all in. It's crazy to me. It's like where's the middle? Where's the compromise? Where's bipartisan? That feels like it's non-existent. And that's probably the most upsetting thing for me as a voter is I don't feel like there is a middle anymore, you know? So that's it. All right. On that note, let me see here. So I'm looking at something on the SPX. That's so freaking stupid. Piece of garbage. I just got stopped out here. Let's trade now. Is trading at what a turd. I'd be upside down about 15 to 20 cents instead of taking a hit on that one. But the call side got threatened, so whatever. I mean, that's my strategy. It got busted. So I took a small loss on SPX. I'm just gonna let it settle in. I'll probably grab something later in the day, make up for it. Just take a couple plays. All right. On that note, look, there's a lot more to happen today. U.S. elections coming, whether you like it or not. We got the Fed on Thursday. We got a lot of companies reporting earnings in the background. I posted a decent amount of trades in my Pulver alerts. You know, to the point. Let's see. MicroStrategy has some BRK.B, so that's Berkshire Hathaway, the B shares. Forex trades I put in New Zealand dollar, pound dollar. Index trades I put in today RSP, QQQE, DJT. That should just go in the stock play. That's the actual Trump stock essentially. I put a 34 by 35 bull call spread. It's 61 cents on the dollar for profit. So if it's right, all I need price to do by next Friday is be up above 35 bucks. That's a pretty good trade. So if he wins, I would assume this stock goes higher. This thing's been crazy volatile. Based on his polling, based on Trump's polling, this stock has ripped to the upside like a ton, and then it got halted to the downside several times. So it's a complete calculated risk. If Trump wins, then that probably, to me, I thought this was better than jumping on Robinhood, jumping on Polymarket or Kolschi and some of those other like betting apps or whatever. It's like, look, I'll just trade this. I'll take a risk at it. That's my way of kind of throwing in some money to say if he wins, I'll make some money, right? But also my entire portfolio. If he wins, I probably make some money. If Kamala Harris wins, I might make some money. I don't know. So price is going to do what it's going to do. I think the thing that's helping me sleep at night is I've got hedges to the downside. Okay. So if the market drops, I'm hedged. Okay. I'm looking for opportunities to buy in more. I'm hedged to the downside to take some near-term profits and offset some of the drawdown. If we go higher, that's easy. This is easy street. If we go higher, that's easy for everybody. If we go lower, that's what separates the traders from the wannabes. So I'm prepared for the downside in case we get it. Otherwise, it's part of doing business by hedging and protecting the portfolio and then waiting at the ready to hopefully scoop up some good discounts if we get them. It's pretty simple. Okay. All right. Out there, I'll wrap it up here with what Ray Dalio says. Save more than you spend and be kind to everybody. Be nice to everybody. That's probably the best way to live. So don't let politics divide you. Don't let religion divide you. Just, have some human decency, be nice to everybody. And it's, last time I checked, it's one planet that we live on that we're probably lucky to be here. So go enjoy it. I think life's too short to be pissed and angry and stressed. So let's try to make some money. Let's see what happens with the election. And I'll see you tomorrow. Thanks. Bye.